Think of the last time you paid for something in cash. Not long ago, this is the last time. You probably remember the hesitation, counting notes, double checking, and watching it leave your hand. That slight discomfort. And now, just think about the last time you paid on UPI. You probably don't remember it at all. A few taps, a green check mark, and done. And this is the strange part. The same money, same amount, and same person, but completely different payment experience. And that difference is not accidental. It is one of the most deliberately engineered psychological shifts in modern financial history. For almost all of human history, money was physical: coins, notes, gold, or even grain. You could then spend what you couldn't hold, and that limitation did something important. Behavioral economics called it pain of paying. Yes, that sounds dramatic, but it's real. When you hand over physical cash, a region of your brain called the anterior insula activates, the same region associated with pain, loss, and social rejection. Your brain is constantly asking, is it worth it? Are you sure? You're losing something real here. It wasn't pleasure, it was protective. Think of it like a inbuilt budgeting software because the cash created immediate feedback, a visible and physical feedback. An empty wallet feels different than a low bank balance. One feels tangible, the other feels abstract. And humans don't understand the value mathematically. We understand it emotionally. And then, in less than a decade, we changed that completely. When UPI launched in 2016, in its first year, it processed over 2 crore transaction daily. And now, by March 2026, over 2,264 crore transactions in a single month. India now handles nearly half of the Earth's real-time payment. And this is an infrastructure at scale. But the part that people rarely talk about is that every product design, every UX choice, and every over-engineered decision is to remove your friction. Cash was slow. Cards became faster. Contactless became even faster. QR codes take it to the next level. And Face ID, it takes less than a second. And in somewhat that progression, stop noticing that we are spending our money at all. Neuroscience shows that when you pay digitally, the brain's financial pain center barely activates. Instead, another region lights up: the reward center. Your brain doesn't even process digital payments as a loss. It processes them as events, tiny satisfying resolutions. It's the same as neurological systems that are on social media platforms. And removing this friction wasn't a bug. This friction was a feature. And once that friction is disappeared, the numbers changed dramatically. A statistic that honestly shocked me was that an average household spends around $219 on subscriptions. But when they are asked to guess it from their memory, people guess around $86. Not just slightly wrong, a 2.5% distortion. Most people underestimate their subscription spending by more than $100 a month, and nearly half are paying for the subscription they haven't even used in months. Once you notice this, you start seeing it everywhere. And this isn't just irresponsibility, it's the predictable consequence of removing the pain of paying. In a cash world, subscription would feel like someone knocking on your door every month asking for money. You'd consciously decide each time. But digitally, it just becomes invisible, automated background behavior below your attention threshold. And the global subscription economy, it has crossed over $536 billion, not because people consciously choose it, but because the system has optimized disappearing decisions. And this is where things become really interesting. Because fintech apps did not just remove the pain, they replaced it with something else, like cashback animations, scratch cards, confetti after payments, the reward streaks, and tiny dopamine triggers. The same behavioral mechanics that are used in casinos and games: variable rewards, intermittent reinforcement. And the goal is simple: minimize time to dopamine, reduce the gap between spending money and feeling rewarded. And it worked. Spending itself became rewarding. The spending is now the reward, not the thing you want. And when you combine frictionless payments, behavioral psychology, gamified rewards, money itself starts changing psychologically. For most of history, money represented labor, time, effort, and physical cash preserved that feeling because it had weight, some texture that you could literally watch it disappear. But numbers on a screen, they become abstract, more like points in a game than resources connected to real effort. More importantly, before digital payments exploded in India, hundreds of millions of people lacked access to formal banking. Cash created vulnerability to theft, distance, exclusion, and UPI genuinely changed that. A vegetable vendor can now accept payments digitally. Government can send subsidies directly to people who actually need them. And for the first time, millions entered the financial system. And all of this matters. This isn't about fearing technology, and it's definitely not about returning to cash. It's about understanding the system you live inside. Because the people designing these products understand your psychology deeply. They studied friction, behavior, and the pain of paying, and they intentionally designed it around, which means awareness matters now more than ever. Because friction isn't always bad. Sometimes friction is where intention lives. That tiny pause before handing over physical cash, that pause was doing psychological work. Digital systems removed it, but you can rebuild it consciously. The system's job is velocity, and yours is awareness. Digital money is real, it just requires your more attention and awareness to make it feel real. And there's one more layer underneath all of this. When you tap your phone and spend 500 rupees, it feels like just a vibration, one instant interaction. But underneath that simple movement, 14 different entities, multiple regulated systems, and real time banking infrastructure are coordinated in under 2 seconds. Invisible systems. The psychology of digital money is one layer, but underneath that psychology, there's infrastructure. And that infrastructure is stranger, more intentionally designed than most people even realize. And that's what we are exploring next. I leave you with that thought. Thank you.